Anything to add?
No, dude, that's exactly what a conventional loan is.
All right. So what are okay? We're gonna have to. Yep. Let's do it again. Hey, we're back again with yet another video to our loan series, talking about all the different types of loans, the benefits, of course, the pros and cons, everything you need to know about what different loans are and available to you as a buyer in this real estate market. So again, I'm here with Team Jones Real Estate in Fayetteville, North Carolina. They're my parents and I love them so much. And we're going to be talking to you about everything you need to know today. So today we're talking about conventional loans. Conventional loans is probably one of the most common loans used in the real estate market. And so we are going to talk to you about what it is and the pros and cons of conventional loans. So to start it off, my first question is, what is a conventional loan?
A conventional loan is a type of mortgage that's not insured or guaranteed by the government.
Instead, the loan is backed by private lending. Insurance is paid usually by the borrower.
And what are the benefits of a conventional loan?
But one of the benefits of a conventional loan is lower interest rates. That being said, if you are able to qualify for a VA loan, that has probably the best rates out there. But compared to other types of loans, this conventional loan has typically lower rates to offer their clients for their 10-year, 15-year, 30-year mortgage.
Second benefit would be the various down payment options. So typically starting at about 3% all the way up to 20%. A lot of people look at down payments as a negative. When you think of it from the perspective of a down payment is instant equity in the home. So that could be a benefit.
And what are the things that people should consider when using a conventional loan?
Something to consider when using a conventional loan, especially right now in the competitive housing market that we're seeing where there's a shortage of homes, is to a seller, a conventional loan looks the most attractive second to cash. Cash will always win the offer up front, but the second one would be a conventional loan because the terms of this loan are the terms. So if I offer a sales price more than what the list price is, protection to say $110,000, this home only appraised for $105,000. I, as a conventional loan holder, will pay that $110,000 unless I cancel the contract. So this is type of loan is attractive to sellers.
And are there any other benefits to using a conventional loan?
So one of the other things you have to consider is how you plan on using the property. If you plan on using it as your primary residence, move in within 60 days, or if it's going to be an investment property or you have some other use for the property. Sometimes VA or FHA loans cannot be used for, can never be used for properties. And for VA, you have to move in less than 60 days. So if you're going to be outside of those parameters, conventional loan may be the best option for you.
That makes a lot of sense. Because a lot of people think, okay, cool, I can invest in some property and just do whatever. But we do have to make sure that we know we can't use VA, we can't use FHA, which is good to know. What are some disadvantages to using a conventional loan?
So one of the disadvantages is if you do not have 20% of the sales price to make a down payment on the property, you will have private mortgage insurance, which is usually called PMI. PMI can range from 0.3% to 1.5% of the loan amount annually. Sometimes this can be expensive, so having that 20% down is best, but if you don't or can't, then the PMI is going to be added to your loan. So some people view that as a disadvantage. One of the other disadvantages may be considered having to have a down payment. You must make a down payment. However, it doesn't have to be 20%. It can be as little as 3%, but you must have a down payment for a conventional loan. And the third thing is, like I said earlier, whatever you offer in your terms to purchase the home as a sales price, there is no protection for you to be able to walk away and say, I'm protected by this clause that says I can't pay more than the home appraises for. With a conventional loan, you can, and unless you cancel the contract, that's what you're going to pay. So those are the three disadvantages that we see as realtors for the conventional loan.
Yeah, I know that there's a common misconception in, borrowing and financing a home in general, where people think you have to have 20%, especially for a conventional loan to buy. So that's good to clarify that, you can definitely still use a conventional loan with lower down payment than 20%, but you have to consider the fact that you're going to have PMI.
Yes, absolutely. And for us, conventional loans have worked really, really, really great because we're not just realtors, we're also investors. So that's how we've been able to purchase all of our investment properties, is using conventional loans. So without us knowing that, maybe we wouldn't have ventured into the realm if this wasn't available to us. All right, so today, guys, we discuss what is a conventional loan. Basically, it's a type of mortgage loan that's not backed or guaranteed by the government. It is funded by private lenders, and the borrower typically pays the insurance on it. Some cons for this is if you don't have 20% down, your PMI insurance, which can vary from 0.3% to 1.5%. You are required to make a down payment, and in offer situations, whatever you offer as a sales price is it, unless you are willing to cancel the entire contract. But some great benefits are lower interest rates, various down payments. You don't always have to have 20%, and it is the best type of loan considered if you are in this crazy seller's market. Your offer will look more favorable to others except cash. So keep those things in mind.
All right, guys. So we've gone over what a conventional loan is, the pros and the cons. We would love to help you find a home in California or North Carolina. So make sure you verify all of this information with your mortgage lender. And of course, comment down below if you have any questions or concerns. And we'll see you next week when we talk about FHA loans.
Peace, guys. See you next week.